In today's video, we're going to talk about Warren Buffett's portfolio for 2023. Portfolio concentration has been one of the key factors in Buffett's outperformance of the S&P 500. With a whopping 68% of Berkshire Hathaway's $334 billion investment portfolio in just 4 stocks, Buffett has shown that he believes in investing big in the right stocks. Today we're going to take a closer look at the 4 stocks that Buffett is invested in and what makes them so attractive. Apple. The first stock that we're going to talk about is Apple. This stock makes up a massive 41.4% of Berkshire Hathaway's invested assets, which shows just how much faith Buffett has in the company. Despite Apple's growth days being behind it, it continues to be a cash flow juggernaut driven by innovation. The company has been able to command around half of the U.S. smartphone market share since launching a 5G-capable iPhone during the fourth quarter of 2020. Sales of Mac personal computers have been climbing, too. Buffett and his investment team also appreciate Apple's management team. CEO Tim Cook is spearheading an ongoing transformation that's emphasizing subscription services. Subscriptions tend to have high margins and can play a key role in minimizing revenue fluctuations when Apple is upgrading one or more of its physical products. But what really gains praise from Buffett is Apple's capital return program. Apple has repurchased in excess of $550 billion of its shares over the past decade and is doling out the largest nominal dollar dividends in the world. Bank of America. The second stock that we're going to talk about is Bank of America. Buffett loves putting Berkshire Hathaway's money to work in the financial sector, and at the moment, no bank stock is more beloved than Bank of America. It makes up 10.6% of Berkshire's invested assets. The attraction to bank stocks is that they're natural moneymakers, as long as you're patient. Even though banks are cyclical and recessions are an inevitable part of the economic cycle, banks are able to grow their loans and deposits over time and take advantage of the natural expansion of the U.S. economy. Bank of America's secret sauce is its interest rate sensitivity. With the Federal Reserve raising interest rates at the fastest pace in 4 decades, no large bank is seeing a larger benefit than B of A. These rate hikes are adding billions of dollars in net interest income each quarter, and the nation's central bank isn't done hiking rates. Despite its seemingly stodgy disposition, Bank of America is also improving its operating efficiency through investments in digitization. Nearly half of its total sales were completed online or via mobile app during the fourth quarter. As more people shift to online, mobile banking, B of A will have the option of consolidating some of its physical branches and reducing its operating expenses. Chevron. The third stock that we're going to talk about is Chevron. Despite being one of the newer additions to Berkshire Hathaway's portfolio, Chevron has quickly become one of the top holdings, accounting for 8.3% of invested assets. Chevron is one of the world's leading integrated energy companies, with operations in over 180 countries. Chevron is a company that is always adapting and finding new ways to improve. It has been investing heavily in new technologies such as hydrogen, carbon capture and storage, and renewable natural gas. Chevron is also investing heavily in digital technologies to improve operational efficiency and reduce costs. This innovative approach has helped the company to stay ahead of its competitors and maintain its position as one of the world's leading energy companies. General Motors. The fourth and final stock that we're going to talk about is General Motors. Despite not quarters of 2022, it has quickly become a significant holding, accounting for 8.3% of invested assets. Chevron is one of the largest integrated energy companies in the world and has a strong competitive advantage due to its massive scale and diversified operations across the entire energy value chain. It has a solid track record of delivering shareholder returns, with a current dividend yield of around 5% and a long history of raising its dividend payments. While the energy sector can be volatile and cyclical, Chevron has positioned itself to weather the ups and downs by focusing on capital discipline and cost management. The company has a strong balance sheet and is investing in new technologies and renewable energy to adapt to changing market conditions and evolving consumer preferences. In addition to its core operations, Chevron is also involved in a number of strategic partnerships and joint ventures that provide it with additional growth opportunities. For example, the company is working with Toyota and Cummins to develop hydrogen fuel cell technology for heavy-duty vehicles, which could be a major growth area in the coming years. Coca-Cola, $22.9 billion, 6.9% of invested assets. Coca-Cola, Co-0.02%, is another longtime holding in Berkshire Hathaway's portfolio, and currently accounts for 6.9% of invested assets. The soft drink giant has a number of attractive qualities that make it a favorite of Warren Buffett and his team. First and foremost, Coca-Cola has a dominant market position and a powerful brand that is recognized around the world. The company has a wide range of popular beverage brands and a strong distribution network that allows it to reach consumers in virtually every corner of the globe. In addition to its core products, Coca-Cola is also investing in new growth areas such as functional beverages and plant-based alternatives. The company recently acquired Topo Chico, a popular sparkling water brand, and has launched a number of new products in the energy drink and coffee categories. Finally, Coca-Cola has a long history of returning cash to shareholders through dividends and share buybacks. The company has a current dividend yield of around 3% and has raised its dividend payments for 59 consecutive years, making it a reliable source of income for long-term investors. In conclusion, while Warren Buffett's portfolio may seem concentrated, his track record of success speaks for itself. By focusing on high-quality companies with strong competitive advantages and long-term growth prospects, he has been able to outperform the market over the long run. Investors looking to replicate his strategy would do well to consider the 4 stocks mentioned in this video, but should also conduct their own due diligence and consider their own risk tolerance and investment objectives. Regenerate response.